practically we're done with substantive. So, but I'm still going to come back to questions if we have more time after. But I need to touch on audit completion. Yeah, which is the section E of the syllabus. Yeah, you cannot escape it. At least you have like 15 marks questions in total, or minimum 10, 12. That will be coming from this part. So you need to also be comfortable. Substantive internal control, substantive testing, and reporting is critical. Yeah. So you have to be comfortable with that. Okay, so I'll just summarize all of this into five things you need to know. Yeah. The first one you need to know what are the activities we do when we're done with substantive testing. That's what we're looking at. Yeah. So number one, you have to do a final review. Yeah. And when I'm talking of final review, you are checking the work that you have done. You are checking, is it compliant with ISAs? ISAs are your standards that you're supposed to use to do your audit, international standard of auditing. So you are checking this work that we have done, is it compliant with ISA requirements? You're checking all the substantive testing that we have done, all the evidences that we have collected, are they sufficient? So you're checking evidence whether they are enough or do we need to collect more? That is still part of your final review. You are also checking this financial statement that we have audited. Is it compliant generally with IFRS? Yeah. Then you are looking at the result of the entity. You are checking with the reality of the industry. Is that consistent? If the industry is doing so bad and your client is making profit of $1 billion, you must be uncomfortable because it's very unlikely. So you also need to check whether your FS that you have, the FS result that you have, whether it's consistent with the industry reality. You need to be asked. Those are the questions you'll be asking when you are doing your final review. And that is number one thing you do during audit completion. Doing this final review, you also be doing some analytical analysis. Yeah, like in this step, you can be doing your analytics for this. And that's why you see that I told you earlier on that analytics is a procedure that you do at the planning stage, you do it at the substantive stage, and you still do it at the completion stage. Right. So that's number one thing doing audit completion. Number two, after you've done your final review, is to now do what we call the subsequent event review. Please pay attention to this. Subsequent event review. Because this summary that I'm giving you might take you 2-3 weeks to understand it. But if you pay attention to the way I'm summarizing this completion and reporting, in 1 hour, you will have everything you need to know for exams. And that is it. It's not more than that. Yeah. So for subsequent review, first of all, you need to know what is subsequent event. Remember, subsequent events are those events after the year end, right? However, those events after the year end can happen at different times. So there are four critical dates that you must know. Four critical dates. Because those dates is where your responsibility as an auditor lies, and you need to know your responsibility. The first date you need to know is the year end. Then you need to know when the financial statement is authorized. So FS authorization date. Usually the directors will authorize the financial statement. So you need to know the FS authorization date. Number two. Yeah. Number three, you need to know when the auditors will sign. So auditor signing date. This is number three. And the final one is when the financial statement is distributed. So that is FS, distribution date to shareholder. Distribution date. Distribution. Yeah, distribution date. That's the fourth date that you need to know. So remember, all the events that happen after this year date up to this point, they are all subsequent events. But your responsibility depends on when does all of these events, when is it happening between 1 and 2, or between 2 and 3, or between 3 and 4, or when? Because all of them are subsequent events and your responsibility differs as an auditor. But you need to know these 4 dates. And that is what I'm summarizing to you right now. And the summary is this: any event that happen between the year end and when you sign your report, any subsequent event, auditors have obligation to actually look out for those events. So you don't wait until information comes to you. You have an obligation to perform procedures in order to identify such event. Subsequent event, yeah, and propose appropriate adjustment. Remember what subsequent event is all about. Take for instance, your your client, one of your client customers goes bankrupt in January. Because January is after December, but you have not signed the audit report. In that case, you have to tell your client to go and change the financial statement, because the client, I mean, the customer went bankrupt January. However, the customer was owing you in December. So, which means that event that happened in January was just confirming the situation that already existed even during the year that you were auditing. So, in that case, you need to make an adjustment, because you need to, I'm sure at this point you should know adjusting and not adjusting, but I'm just bringing that to you as well. However, if, take for instance, you have a warehouse with inventory on fire after year end, yes, inventory has been burned down, so we don't have inventory again in 2025, but that kind of situation does not confirm existence of no inventory in 2024. So in that case, we will not adjust. Though it's happening after the year end and it's bad, but we will not adjust. However, because I mean it's significant and it's a major event, you can put a disclosure before you sign the accounts, but it doesn't mean that you need to adjust. Okay. I mean, that's just to give you a bit of spice onto adjusting and non-adjusting. But the main thing you need to know is, where do you have an obligation to identify subsequent event, and when don't you have obligation? So if the event happens between the year end and the date you are signing the report, you must perform procedures to actually identify such event. However, if it is happening after you have signed your report, which means between now and here, you don't have any obligation. Here, there is no obligation. No obligation. However, if anything comes to light, maybe while you are sitting down, you saw a news come to you, or somebody tells you something, you still have the responsibility to engage your client and see whether you have to modify or you need to seek a legal guidance. Right. So there's no obligation here, but here you have an obligation. So please take note. That's what you need to know majorly about your responsibility for subsequent event. The third thing you do during completion is going concern review. Remember, you have finished the audit, substantive testing is done. Now you are closing. So you need to do going concern review, which means this is where you check whether truly your client is entitled to that assumption of going concern, because they would have used that assumption to prepare financial statement, as you have learned in your financial accounting days. Going concern is that as you are assuming that this financial statement is for a company that will definitely exist for the next 12 months. But is that true? Is that assumption true? Would your client that you're auditing, would they truly exist for the next 12 months? So two things you are doing here, you are checking for the appropriateness of that assumption that they have used, and whether they have done sufficient disclosure around it. That's all. And how do you know whether it's appropriate or not appropriate? If your client is making a lot of losses, then you should be uncomfortable. If they have huge debt that is due for repayment soon, you should be worried about the appropriateness. If they have lost major customer, you should be worried about the appropriateness of that going concern. If they have negative cash flows, you should be worried. So in that case, you need to perform procedure to really be sure that it is appropriate. And when you are doing that procedure, what are you looking? You'll be looking for cash forecast and budget. See how they plan to recover. You're looking at their budget to see how much revenue they are projecting. You are looking at their business plan. Yeah, maybe they are planning expansion or they have something good working. Yeah, you are checking whether they have new customers. Yeah, just to be sure that the business will definitely go on for the next 12 months. Right. So that's all you need to do for going concern. Number four, there are five things you will do. The fourth one is you need to collect a representation letter from your client. We call it rep letter in practice. Extremely important. This rep letter is just like auditors trying to hide under a letter, because you still do your work as an auditor, but despite, you still need to protect yourself by collecting representation letter. Yeah, in this case, what is happening is auditors will be asking the client to just give this letter to confirm and support all other evidence. So basically what you are saying is you want to confirm, you want client to confirm and support all audit evidences that they have given auditors. Yeah, so that's what this letter is saying. Client to confirm and support all audit evidences. So usually they are saying they accept responsibility that they are supposed to prepare financial statements, all information and evidence they have given to you as auditors are correct and they are complete. They are giving you every confidence that they have not omitted any transactions. They are telling you that all estimates that they have made are all reasonable and complete. They've not hidden any information. So they are just giving you comfort on everything that they have provided to you, and you must collect that letter. And that is the fourth thing.